Joining me now to break down this week's movements is Martin Smith, Portfolio Manager at Anchor Capital. Martin, as always, many thanks for your time. Let's perhaps start with the overall performance on the JSE. A little bit of a volatile week because of some of the global catalysts. So maybe just break down those movements that we saw.
I think we were always going to get some volatility. We obviously had a lot of optimism around the announcement of vaccines with Pfizer and Moderna, which pushed the markets up significantly in November. But again, there's a lot of moving parts, and how is it going to be administered? And there's also talk of stimulus that's coming through. So there's a lot of moving parts, and even locally, the conversation around our COVID cases and the fact they're rising. Obviously, we saw President Ramaphosa announce further restrictions across the Eastern Cape yesterday. So again, there's a lot of moving parts. There's some optimism. I think there's some tailwinds both locally and globally, but I think we will continue to see, until COVID's probably in the rearview mirror, a little bit of volatility over the next kind of 3 to 6 months.
Right, let's move on to some company news now. Oceana releasing their numbers showing that revenue had increased. I guess a lot of people are into seafood products in these times, like Lucky Star actually. What did you make of what they had to share with us?
It was a very, very strong set of numbers. Like you mentioned, revenue was up nicely. Headline earnings per share was also up very strongly, as well as a strong dividend. I mean, the company's on a 6% dividend yield at the moment, which in this market is pretty good, obviously. But I think overall, it's, like I said, a positive set of numbers. The share is looking attractive. I think, like any cyclical share, there's things that are outside of management's control, but overall, good earnings growth, good cash generation, and I think looking quite reasonable at these levels.
Right, and then another one that released, they actually, Kumba Iron Ore, releasing their full-year update. What did you make in terms of what they shared with their shareholders today, also about their targets and the like?
So there's a couple of things to note out of this update. They cut their production guidance by about 5%, which isn't massively material from a kind of sales or revenue perspective, given that they'll make that up from the inventory. But it does kind of point towards some challenges in production for the company, so that's one to keep an eye out for. But we also need to look at Vale cut their production guidance earlier this week, and obviously it's one of the big iron ore producers in the world. So we saw the iron ore price go up quite nicely this week, which is very, very positive for the company. So I think it's one that we like, cash generative. And I think having exposure to iron ore at these levels is something that I'd like for my clients. So happy to hold, because I own it across some portfolios, and happy to buy at these levels.
Right, and then the final company, Ellie's, yesterday with a trading update, today with their numbers, also a solid set of numbers given the times that we're in.
Absolutely, but we also need to remember that there are things coming off lower bases. And we'll see this from some companies. And again, the market's forward-looking in terms of companies like this. So I think some of the small and mid-cap shares do offer optionality going forward, given the earnings bases that they started on. Again, talking about the bases that they come from. Again, would I be looking to own something like Ellie's? Probably not. I think there's other opportunities out there. But is there optionality, and may the share go up? Absolutely. I think we can see that across the small and mid-cap sector across South Africa. So again, opportunities, but just depends where you want to play in.
Right, Martin, as always, thank you for your time. That's Martin Smith, who's a portfolio manager at Anchor Capital.